On today's show, the three questions. Number one, what does economic data tell us about how we ended the year? Number two, what is FinCEN and BOI reports and why should you care? Number three, will the IRS finally let us file taxes directly? Welcome to Dennis Money's 2 Cents, where we help Dennis navigate all the noise. I'm Matt.
I'm Victoria.
I'm Ryan.
And I'm Rabih.
You know what's better than three of us together, guys? Four of us together. Here we are, special show on this Friday.
Yeah.
Four of us together. We are feeling extra excited. We have Ryan joining us today. Let's jump right into it. Rabih, talk to us about economic data and what it tells us about how we ended the year.
Yes, we finally started getting economic data back. The vacation has ended. Now we're getting GDP reports. We're getting inflation reports. But they're about December 2023. But it's so interesting to know because now we're able to look at the year in whole as an aggregate and see whether, Fed expectations were accurate or not. So all of this is happening while the S&P 500 and the Dow and the NASDAQ are all making all-time highs. Earnings season is going through. We're only 20% in, so I will not be talking about earnings until we get much more data in. But let's talk about the economic data. So earlier this week, we received the Q4 real GDP return for 2023.
I've been dying for this data.
That was your late Christmas present.
Yeah,
So,
seriously.
If you go back to the December Federal Reserve meeting, Federal Open Market Committee meeting, they were anticipating that the GDP for the year 2023 will grow at 2.6%. And this will all depend on how Q4 will do. The expectations for Q4 were the economy is going to grow 2%. And to put that in reference, we had around 2.2% in Q1, 2.1% in Q2, and then Q3 came really strong at 4.9% real growth. And then we were saying we guess Q4 is going to also be 2.2 or 2, and that would average out at 2.6 for the year. Earlier this week, Q4 came at 3.3, which
Wow.
of expectations. Those numbers are all annualized. The economy did not grow 3.3% in the whole quarter. It grew 3.3 divided by 4, so around 0.8. But this is still 50% more than you would expect it to grow, which is a big number compared to a 2% benchmark. You're growing at 3.3. This puts the GDP for Q3 2023, based on this first revision for Q4, at 3.1. So, guys, I'm just gonna phrase it this way: who would have expected 2023 we have an economy growing at 3% and inflation getting under control?
We call that, dare I say, a soft landing? Is this plane coming in softly?
It might. We haven't seen a pullback away from an inflationary environment to a robust growth. It's usually pulling back from inflation environment to a contraction. And if this is happening, if this is going to happen, it's like we are rewriting how we do economic implementation. And Jerome Powell, the Federal Reserve, would like to put that on his resume. So I think they're being very cautious not to mess up what ended up happening. And so far, it's been really good.
I think we... Oh, go ahead, Ryan.
I was just going to say, Rabih, you're going to have to redo your PhD when they redo all your economy books and everything. You're going to have to do another one, man.
I feel like we will know for sure when we've hit a soft landing when Jay Powell gets on Instagram or some type of social media and hits the gritty or dabs or something like that.
Right, guys.
What?
He widowy hits the gwitty.
He widowy hits the gwitty. No, but this is as close as you can get, at least the data showing us, Rabih, that a soft landing is at least looking like a reasonable expectation. Or am I misinterpreting that?
There is a really good, strong counter argument, which is the yield curve, whether you are taking the 10-year or 2-year or the 10-year and 3 months, and you're looking at the spread between them, is still inverted. And it's been inverted for over 500 days, almost 2 years. And historically, if you assume that this is a good leading indicator with a success rate that's in the high 90s, there has never been a recession that was not preceded by an inverted yield curve. So from this perspective, it's just saying the yield curve has to uninvert at one point, because this mechanically affects how money flows into the economy and whether banks are willing to extend credit to businesses. And this will slow down the economy the longer it stays inverted. So the argument that's been running on the street, given that soft landing really put the nail into the coffin, that yes, we avoided a recession in 2023, is that this is simply prolonging it until there is an exogenous shock that would hit this fragile economy, simply because the yield curve is inverted from a monetary standard perspective.
So the yield curve either gets or uninverted by either the Fed lowering rates on the short end, like they've said they're going to do in 2024,
Yes.
and the long end of the curve stays, at least either maintains, or the supply and demand mechanics change on the long end for various reasons, and then yields go up on that end.
Exactly. And both of them, the short end and the third end, are very sensitive to external shocks, whether it was a global recession affecting the US or investors' sentiment and expectations about the creditworthiness of the US affecting how the yield curve would move, as well as, just the good old normal recession where the Fed has to intervene and cut interest rates. So there are so many mechanics that might make that pan out. However, what I have also to report on is we saw that the economy grew by like 3.3% in Q4. What were the sources of them? Is it like, are we being like fostered by, I don't know, good currency that's affecting import-export? Or is the government babysitting a growth in the economy? On the contrary, out of the 3.3%, 1.6 of that is coming from actual consumption, and around 0.6% is coming from companies investing. Although they are firing people, they are still investing in their capex. So, and this is how you would want the economy to function, because the consumers account for 70% of the economy, businesses account for around 17% of the economy. So if the largest portion of your economy is the one that's producing the most, it just tells you that it's a robust economy, and that growth that we are seeing isn't really superficial or temporary. It's your main engine is what's driving your car. And this is what we'd like to see.
Rabih, how much of that 1.6% was due to Taylor Swift?
That's
I'll
actually
get you the numbers next time.
great call.
Just a few billion. It's not a big deal.
Is it like the whole thing, or
is it like 90% of it?
Yeah. One thing we know for sure, the resiliency of the American spender, the American consumer,
Just thinking of that.
it's like what's more resilient, a American consumer, a cockroach, or a Toyota car? I don't know that, but they're equal, I think, at this
credit
point.
cards.
Yeah, it's unbelievable.
That is interesting, though. You think about all the predictions that were happening for last year and how everyone you talk to is like, oh, this economy, man, I'm really worried about all this. And then everyone just spends like crazy. Like, we're still buying everything we can possibly buy, and then some. Yeah, it's funny how we behave with our spending. While at the same time, you're like, I'm really cautious. I'm probably not going to invest for a while because I'm really worried about this economy. But you're like, I'm 10 grand in credit card debt from Black Friday.
Yeah, it's so true. Okay. Well, and in some cases, we talk about the complexity of the market, right? And it is very, very complex. But also, sometimes you can break this down and say, well, it's actually there. In some cases, it's relatively simple in some ways, meaning when it comes to this topic, Rabih has hit this time and time and time again. Until the American consumer stops, or there's a reason to pull back on spending, which there just apparently has not been, the economy is going to keep marching. Like it just, unless we have another, like you said, some massive shock to the system, which obviously could happen at any point. That's the true risk, is the things you're not accounting for. But as long as we keep spending like we are, this train keeps moving.
Are we?
And we are.
What kind of shock to the system would it be if Taylor announced a second leg of the U.S. tour, Eras tour?
Oh man, draining my bank account first.
Towards spending again. We're going again.
Yeah.
Here's I'm going to call it right now. I'm going to call it right now. The shock to the system on the negative side is T Swift breaking up with Travis Kelce.
Oh,
yeah,
no,
and then the next album
and then recession.
Wait, the next album would be called travesty.
Yeah, you already have it. You already.
I
have
already
it.
know.
Okay. Moving on.
Face.
Moving on. Rabih, anything else on economic data?
Just the other side of the coin, because we've seen strong real growth, but you wouldn't want that to exist if inflation is still high. And just a couple of hours ago, the core PCE data for December came in, which is the Fed's most preferred inflation index, which it is the one that they want to bring to 2%. Our previous record year on year for November was 3.2. The forecast was 3% for December. It actually came in at 2.9, which is lower. However, month over month, it is a tick of 0.2% versus a 0.1%. I know I'm talking into like the decimals, but this means a lot for people who are making sure that the trend is going in the right direction. A 0.1% will actually decide whether it's going flat or it's going down. And inflation is going down, economy is going up. This is the best case scenario panning out, and this is why the markets have been going up along with like good earnings. And we'll see how long this lasts. And yay.
Where are we, Rabih, year to date on the market? Do you know? I mean, not to put you on the spot, you probably didn't have this data in front of you, but
I'm guessing around 2.8%, 3%. I will let you know. Okay, so on NASDAQ, we're up 4% for the year. S&P 500, we're up 2.78% on the year. Dow 1.26 on the year. So
got it.
It's more growth than value, but it's been a good year so far.
Yeah.
I just have to say I have now not stopped thinking about Taylor Swift next album puns based on football terms.
Yeah. Just going for it.
I can't stop thinking about it now.
I can't wait for the list. I can't wait for the list to hit Slack later today in the DA Slack.
We'll release it on Instagram. How about
We will
that?
release
Ryan?
our Taylor Swift puns for the breakup.
My brain is going like there's just
Write it down. I'll release it on Instagram later.
all right.
Okay, Rabih, we feel good with that. Any
Thanks,
other?
Rob.
Yeah,
Thanks,
that was
Rob.
awesome. I always love this part of it. We always start with this because it's like if you just want to get the economic and market data from Rabih and then tune out, you can do that. Now you can turn off the show if you want. Although, stay till the end. Stay till the end. We're going to do a case study. I should have hit that at the beginning.
Oh yeah.
Okay. Number 2, what is FinCEN and what is BOI Reports and why should you care? Ryan, I know you've been riveted by this.
Yeah, the title doesn't make me care at all.
I couldn't think of a better question. Okay, I'm sorry. I'm not a marketing guy.
No,
But
those
this
acronyms, that wasn't
I
your
know.
doing. The
It wasn't me.
The question is, how do I avoid getting charged $500 a day starting next year? That would have been more dramatic.
much better. Yeah, this is real. This is real.
Guys,
All
I got to
ears
bring
now.
the drama, the
You
stats
really
and the
do.
drama.
I should have had you do that question. And it is true. The government loves their acronyms. It's interesting. Save and repay and pay.
Yeah.
Okay.
Like this one is like boy.
Like,
there's
the
a lot
boy
of
report.
play on words you could do.
Yeah, boy. Okay. So this is critical though. This really is. So everyone tune in, turn up. Gosh, I hate myself.
Don't turn up. Don't turn up
Don't
too much.
turn up
It's
too
still
much.
early. It's still early.
I just think of the Drake. I just think of the Drake line when he says, "I didn't pay my taxes. I'm too turned up." Okay. So
fine. All right, let's hear it.
you get fine. Okay, so this is really is important. So FinCEN is it's the, let me tell you, I just had it, the Financial Crimes Enforcement Network. So it's basically a government agency set up to stop financial crimes. And in 2021, I think the law passed by Congress to basically require, outside of some exemptions, require every business owner to file a report through FinCEN that basically, I think, is the main purpose of the law is to try to eliminate or stop financial crimes. It's kind of their way of reporting businesses. So we're not going to go into every detail. We will post in Facebook and we will be talking about this with clients on our upcoming meetings about kind of how to do this. But here's the critical parts of this. You have to go to FinCEN. It's fincen.gov. And then you /BOI. What BOI stands for is Business Ownership Information. And it takes not that long, a few minutes, I think. And you have to report your business. And there's some things you have to report. Again, it'll all be on the website there. If you set up your business prior to January 1st of this year, you have until the end of this year to go fill this out on the website. And as Victoria said, if you don't, by the end of this year, starting January 1 of 2025, you will be fined $500 a day. So it's a big deal.
Ridiculous. It's ridiculous.
How many people are not going to file? Just they
That's
don't hear about it.
That's my fear. Is
Nobody
how are you supposed to know about
us.
this?
Yeah,
it's crazy.
Anyone associated with us, clients, anyone listening to our stuff, at least we're going to put it out there enough that you don't have this where you're not reporting. It doesn't take a long time. So contact us if you have questions. We can point you in the right direction. I can put a link directly to where the FAQ page is and where you can fill out this information. Again, we talked to a partner of ours, a CPA group. They're brilliant. Shout out CFO Ortho. We talked to them yesterday, and they said they've been helping clients do this as well. And they said it's really not hard, but you have to do it. If you set up your business this year, so in 2024, after January 1st, you have 90 days to report. Starting January 1 of 2025, you have 30 days. So just something to keep in mind. We'll keep talking about this with clients. One quick caveat here. If you are a sole proprietor, you do not have to report. So if let's say you're an associate, and you're just a sole proprietor, as you're collecting money, you're not a W-2, but you technically have your sole proprietor business, you don't have to report. There's also some caveats and some exemptions that you can look at on the website. Again, we'll post it, but this is again critical for you to go in and do this BOI report, because if they catch you not reporting, it's a big deal. It's going to be expensive for you to not report this. So that was a quick one. I wanted to make sure we hit it and emphasize the importance, but any thoughts on this, guys?
How's the government going to know if you didn't?
I mean, that's a good question.
That's my thing. It's if you don't report it, how are you going to charge me this $500? I mean, I think you should still do it. That's the guidance, but that's my thought there. The government does this all the time, where they're like, you need to fill out this form. Okay, what if I don't? What are you going to do about it?
Totally.
And they don't know. Yeah.
So that's a great, honestly, all jokes aside, Victoria, that's a great question. We talked about this in our meeting this week. And I think the answer there is it's if you get audited, or I don't know what their reporting is on the backside. What I will say is I had a client, remember during COVID, there was all these, right? There was obviously PPP, there was EIDL, and then there was one specifically called HHS. It was the Health and Human Services. And there was things you could submit to get money back from HHS. I actually had a client who did that. They filled out all the reports and then got money. It was $20,000 or $30,000 from them, and failed to later on. It was 6 months later. They failed to submit the proper reporting required after the fact, right? This was all part of the gig. And they got a letter from this HHS group, and it was basically you owe us. It was something like $20,000. So I would imagine it would be something similar. They're going to have some type of mechanism in place when you go to register your business. My guess is the FinCEN and the government is going to have some way to track that. I'm only assuming. And so if you do that and they find out, my guess is you're just going to get a letter one day, and it's going to say you owe X number of
$10,000 from
exactly
$500 a day.
But honestly, so
penalties.
And the thing is, it's so simple and straightforward to do this. It's don't even chance it. Just go. We'll post the links. Just go report it. It takes you probably 5-10 minutes. Again, we'll hit this with every client. We'll keep hitting this on content, reminding people throughout the year. Make sure that you're doing this before the end of 2024.
Yeah, boy.
Yeah, boy. Okay. We feel good with that. Scared everyone, hopefully sufficiently enough to go report your boy.
We talk to your boy.
Talk to your boy, report your boy. Okay,
boy.
Number 3, Ryan.
Yeah.
Will the IRS finally let us file taxes directly? You sent me a interesting tweet on this, or X. Hit us with this.
Well, to just all clarification, it was a screenshot from Reddit, which was a screenshot from X.
You were deep in the bowels.
And the funny thing is, I belong to neither platform. I have no logins on either platform.
That's
These things
pretty funny.
You can't see anything on X, right? Unless you log in anymore.
No, that's not true. It depends on it depends on, now you can do the subscriber thing.
Oh,
So like people can say like you can't see my stuff. It's like a setting, but I think most people that you follow are still just posting
yeah.
like normal.
I don't know. This was like double inception screenshot from multiple platforms. But the short story is that the IRS. I mean, this is kind of funny on the back of a story that you just did about the efficiency and reporting of the government, the federal government. They've been talking about this forever, and they've had kind of a program like this, but they are going to launch this year a direct file tax return program for free. So people can file directly their tax returns with the IRS instead of using a CPA or TurboTax or H&R or any of those tax softwares, which is also interesting because TurboTax has always been getting in trouble for their advertising. This year, they're getting in trouble again for saying, you see those ads, it's like file for free, but it's
Yeah,
But it's not
never
free. It's
not
never
not
free.
What was the
No.
screenshot I sent you, Matt, that Americans spent?
Yeah, you just sent it to me this morning. We can find it.
Let's see, Americans spent over $14 billion with a B as in boy, of course. $14 billion on tax prep services last year in 2023.
Yep.
Oh my
$14
gosh.
This includes
billion
CPAs,
right?
This includes CPAs.
Yeah.
It
think-
has to. It has
Okay.
to. Tax
This-
preparation services.
And this says no wonder tax prep companies are fighting tooth and nail to stop the
Yeah.
IRS from launching free filing tools.
Ugh.
Before I give you any details, though, does anyone have any like hope that the federal government's going to come out with some killer tool, some great piece of software that's going to like run well and beat private for-profit companies that
No.
make billions
Their
of dollars?
record doesn't help.
No.
I mean,
Just
I would be a little bit dubious of that, but
Dude.
I will say Victoria was showing us the IRS's Instagram before we hopped
yeah.
on here.
Yeah.
Maybe they're getting with the times, people. Maybe they are.
Maybe if they get maybe I'll change
They
my
got Gen
answer
Z
on
on.
that. There's some hope because if you don't follow the IRS on Instagram, please
should.
do give yourself the gift today.
They love some good water puns.
following the IRS on Instagram.
Yeah.
But yeah, maybe if they got some Gen Zs up in there, they could actually create a somewhat
Something that'll work.
functional website. Yeah,
Yeah.
maybe. I have
Right
hope in the next
now-
generation.
As it rolls out this year, I'll just read you some of no one listening to this, I don't know, maybe someone listening to this could actually file. Most people are going to be probably filing with a CPA or some tax preparation.
Or should be. Yeah.
But a lot of people's family members, children, team, partner, spouses, they might use services like this. And, so this one will be available in 12 states only. Right away. So Arizona, California, Florida, Massachusetts, Nevada, New Hampshire, New York, South Dakota, Tennessee, Texas, Washington, and Wyoming. Those are the 12 states.
Not Utah.
Wow, they started with California and New York to kick it off, huh?
And it's only available to some in these only 12 states. It's only available to some federal and state employees.
Okay, so 11 people can use it.
I'm not done.
Perfect.
And you have to only have just pure W-2 income. If you have anything else from like a side gig or business or some passive income stream, you can't use it.
So they have no faith in themselves, basically.
Yeah. One more. And if you're
there's more.
And if you're itemizing deductions, you can't use it. So to recap, if you live in one of these 12 states and you maybe are part of some federal or state employment and you have no other income
and you're poor
and you're poor and you don't itemize, this tool might be for you, but probably not.
Okay.
There's the rundown of the IRS's.
So let me
hold on real fast. You know what this reminds me of? My teenagers are going through the seasons of The Office right now, showing them that classic.
Such a good show.
Reminds me so much of Dunder Mifflin Infinity. Like so much
it's so true.
This is what it feels like. It's like watching The Office.
So I wish you set us up because you asked us if we had any faith, and any faith that I did have was just obliterated by that. The fact that you just said that. So basically, they're like, we're going to come out with this tool but nobody can use it.
Nobody
But
can use
but
it.
we have this tool. Cool.
It's gonna be sweet for 3 people.
Yeah.
Those
gonna be
3 people.
great.
Those 3 people are gonna save like $65 this year.
Yeah.
And good for them.
Legendary.
But
Yeah.
I mean, it's funny because it's like private companies are fighting tooth and nail to stop the government. It's like the government stops itself, so I don't
Yeah.
think they have to worry about anything.
You don't have to put much of a fight.
Yeah, however, the whole TurboTax thing getting sued or I don't know if they're getting sued. They've been, maybe they are, for saying that they have like free tax prep.
It's not.
It's not free. That sucks, and that's not fair, and that's lame. So shame on you.
Shame on you, TurboTax. I've
Wait,
used them the last few years.
When's the shame section of 2
Right now.
cents?
Shame
Okay,
on
right now.
Yeah.
Shame on them for advertising.
Shame
like
on
that.
you,
Shame on
TurboTax. How
Shame.
dare you?
A pox upon you.
They're going to start coming after us, you guys.
They are. They're a listener of the show.
This is
for sure.
defamation.
Okay, so
anyway, there you go.
the answer to that, will the IRS finally let us file directly? No.
No.
No, they will
You
not.
just answered it.
Yeah, they won't. They will not. Okay.
They will not. Well, yeah. I mean, it's like to this day, I've been trying to register a car that's past registration because it didn't pass emissions because it's super old and blah, blah, blah. And I can't pay anywhere online just to pay my registration. I can mail them a check or money order or
Perfect.
go to their office.
You know
They
who would
can't-
help with that? Your daughter, who's crocheting. She could probably write a check because she's 80 at heart.
She could probably do that, actually.
Yeah.
Yes.
Sounds right up her
so,
alley.
Dude. The government's not going to help us
No.
with any software, but their Instagram, IRS Instagram, is straight gas.
That's the
Yeah.
straight fire.
So good.
Okay. That was awesome. 3 questions. Hopefully they're valuable. The main
Or
point here is,
entertaining. Or
or at least entertaining.
Mildly
yeah.
entertaining.
We
Yeah,
strive to be we strive to add value and be entertaining. Hopefully we thread the needle there. We are going to finish this up the way we did last week, and we're going to start trying to do this from now on if we can. We tested this on Instagram and had quite the positive response of people liking this. So we're going to try to do these more often. We are going to finish this out with a case study. So study buddy Victoria, hit us with that case study.
All right. You guys ready?
Applause. Where's your applause thing, Matt? Don't you
Oh,
have like a...
yeah.
I do. I mean, I can hit it. Robbie,
Rabih hates it, though. I think Rabih will log off if you do it.
are you going to log off if I do it?
Yeah.
I'll
Hey,
allow it.
You'll allow it. Okay, hang on. Let's back up.
Oh, yeah.
Let's back up.
Yeah,
Let's
Can
see
you
if it works.
reintroduce me?
Okay, we're gonna finish the show with a case study.
We're not editing any of this.
Not editing any of this.
Yeah.
We are gonna finish the show with a case study. So, study buddy, hit us with that case study. It's not working.
Oh, there it is. Okay. Oh. Yeah. You know what that just did? That just did the thing like where millennials start a video and they pause for a second and then they
Yes.
go. Yeah, that's what just happened.
Oh, it's so true. It's so
That's
true.
just
Okay.
Thank you very much. All
Thank you.
right.
The people want it, Victoria. The people want it.
The people have responded, and they responded
Yes, they want it.
positively. All right, cool. You guys ready?
Ready.
Okay. I'm a dentist out of Kansas. I just started buying into my practice. I have one partner and no associates. We did about 2.2 million in collections last year. I'm married with a couple of young kids. I want to get involved in real estate, so we are planning on getting a rental property within the next few months. I don't have a good understanding of my numbers with the practice or on the personal side. I'm making decisions in the dark, and I'm kind of just going with it to stay afloat. I'm mostly concerned about if I'm saving enough for retirement and if I can send my kids to college.
Okay. I've got thoughts. Ryan, you got thoughts.
I'm sending kids to college this year, and I think if you live in Kansas, you could probably afford to, but don't move by anywhere near me, and you can't. So
Don't
you
do
can
it.
send your kids to college in Kansas. I think so. Yeah. Triggered.
Trigger.
Triggered.
College
Okay.
kids going to college. Do you want me to go a few
Yeah.
thoughts right off the bat?
Sure. Yeah. Hit it.
I like.
We're gonna have similar thoughts. We're gonna have similar thoughts.
We always do. Is it about donuts?
Yeah. Always. It's Friday.
Okay.
Yes.
I like that this person is being so like introspective and self-aware in the things that they are not clear on. I think it's cool that they have these goals. Like, I want to be in real estate. I would love, if I was in this conversation, I would love to know why. Just, what's driving that. That's always really interesting, what motivates people. But I like that they're being kind of just self-aware about feeling disorganized, not knowing their numbers, not sure if they're on track, not saving enough, wanting to do this huge thing of buying into what sounds like a big, busy practice, a very successful practice. So for starters, I like where they're beginning with their own self-questioning and kind of putting the big picture out there of all the stuff they want to do, and then being just really vulnerable and honest about not knowing where to begin and not being like on top of it all. I think that's cool.
We were not thinking the same thing at all. No, I'm just kidding. I'm just kidding. That you're so sweet, Ryan. You're so sweet.
Yeah,
and
he
I
always
agree
brings
with you.
that in.
I do agree with you. I think it is great that they're putting this out there, that they're being introspective. Here's the red flags, though, that I see when I hear this. When you say, I want to get involved in real estate, so planning on getting a rental property soon, quickly followed by, I don't have a good understanding of my numbers with the practice or the personal finances, alarm bells are going off in my head.
I
And
agree.
so,
Well, especially, did this say they haven't bought in yet, but they want to?
it
But
says
they're going to.
they are they're starting to buy into a practice.
So they're jumping the biggest, by far biggest decision they might make in maybe their whole lives, or one of the few huge, biggest. And then they're prioritizing this, like, I'm going to jump into real estate before I even understand what's going on with my giant career decision.
You're exactly right.
Yeah, it's an issue.
We have said this so many times. We are not anti-real estate. We are pro-thoughtful decisions. And this is not thoughtful. When you say, I want to get into real estate, not only I am going to buy a rental property soon, and then you don't even understand your numbers of this partnership you are about to embark on, that's a huge problem. That is a recipe for you getting to a place in 4 or 5 or 6 or 7 years and being so lost, so frustrated, so stressed,
Or
not
strapped,
knowing.
Yeah.
When you say I'm making decisions in the dark, and then, but again, before you, and again, I agree with you, Ryan, they're being introspective, they're sharing. I think it's great. They're being vulnerable and saying, I'm concerned about these things, and they're concerned about saving for retirement. They're concerned about their kids. Let's forget about real estate for now. There is a time and a place. Do not go buy a rental property right now. Just don't do it.
If this question was, I'm about to dump a big chunk of money into stocks, but I still have no idea what's going on and all the other stuff.
Don't do it.
You'd feel the same.
Don't do it.
Yeah.
There's an order to this. Victoria, you got thoughts?
No, I think those are, I align with that. I think if you're having the questions of, I don't know if I'm saving enough for retirement, and your other question is also, I'm not even question, like, I'm going to do real estate. Like, maybe let's take all of these priorities or goals of yours and then tackle them one at a time. I think if you're saying I'm in the dark, but I'm going to invest in real estate, that's a recipe for disaster. So I agree with you, Ryan. I would want to know, why real estate? How did this come into your head? How did you come to this like mindset that this is the next best thing for you, before understanding like retirement and if you can save for kids' college? I think the overarching issue is just not understanding how to prioritize, because real estate isn't inherently bad. It's just, now, is this the right time? So really the way I viewed this is, you have a lot going on and that's great. Let's prioritize in a way that makes sense for your goals, risk, time sensitivity, and then tackle one at a time.
I mean, I've got more questions on the partnership and the practice even before I even jump into anything to do with real estate. So that's a whole bunch of conversations and planning and discussions around that and getting a handle on these numbers. So yeah, to your point, Victoria, it's not that we're saying don't get into real estate. We're saying the order of this stuff matters. Rabih, jump in here. What are your thoughts?
Whenever I'm like facing an uncertain situation like this, I really like to go back to our financial planning framework that we use. And you guys are the financial planning veterans here, but like the framework of organize, analyze, decide, and act in that order is very important. It seems like this person didn't even organize yet, but jumping to the act section. And I'm a numbers guy. Before I do the organize and analyze, I can't really come up with an advice. So I just take a step back and do it in the right order, I guess.
Yeah.
Organize, analyze, decide, act.
No, but
Thank you, Ryan.
Thank you, Ryan, for
And
that.
that's a wrap.
Then we're going to wrap it up there. No, but again, to that point, we got to stop this mindset. We got to go on this campaign of dentists thinking that real estate is the answer to their wealth, or like them fast tracking their wealth. I'm not saying this person is saying that. I'm saying this person is acting like that.
Right.
If you are saying, I really want to get into real estate and I'm going to go buy a property, what your action is telling me is you think real estate's the answer. It is not the answer. Real estate is a place you can park money and continue to build your wealth, just like stocks are, just like other private businesses are. Your answer to wealth is your practice, is your skill set, is making that as efficient and effective and profitable as you possibly can. And so again, when I see you're jumping into real estate and then you immediately say you don't know your numbers, that's a huge problem. That is a huge problem. That is not going to set you up for success. So I'm not going to harp on this too much, but hopefully that helps. Any other thoughts you guys have?
No.
Okay, perfect.
Covers it. Oh, actually, one follow-up question. Did this person schedule a consultation?
Mm-hmm. Yeah.
Yeah,
okay. Well, then they're going to be fine.
Yeah, they're going to be just fine. We get this data. This data from our. I think I explained this last time, but this is actually perfect, Ryan. We'll hit this again. We should set up all our case studies with this. When someone sets up a call with us, we talk to hundreds of dentists every year, and when they set up a call with us to talk and tell us their story, and we answer questions and hopefully add some value. Prior to that, we send out a survey for them to fill out and give us some information. And so this is from that. We take this data and so yes, I don't know if we have talked to this person or not, but if we have not, they can listen to this and they'll hear what we're going to say.
Yeah, that's a good sign for them. Someone putting it all out there and then reaching out to a third party, whether it's us or someone else, to get some feedback. So that's good. Good for you.
Yeah, definitely.
Kansas dentist,
we love you. And
now here's the reality, though. I'm just guessing. I don't live in Kansas. I have some clients there, but Kansas real estate is probably affordable to some degree.
Cheap. Yeah.
I'm gonna guess. We're gonna guess.
You might be okay in pursuing that eventually at some point at the right order. So
for sure.
Best of luck.
Okay, guys, this was awesome. We had a wonderful time doing this. We were sorry we got a little out of hand, and maybe a little bit on this Friday.
It's my fault. I'm the wild card. I came in and then we ran.
It makes it whatever. It makes it more fun.
Makes it entertaining.
Again, we're going to end this the same way. We want to plug, yes, shamelessly, the Dentist Money Summit. I'm tired of plugging this. Ryan, what are your thoughts on the Dentist Money Summit? Do you have any thoughts?
I don't know. Do you like to spend a few days in gorgeous mountain settings in a beautiful, perfectly temperate climate in the middle of summer, listening to like world-renowned speakers that'll change your life? I mean, if you are,
if you don't like that, then don't come.
If you don't like that, stop listening. But yeah, and you like to spend your time with some of the smartest people in the industry, in the dental industry, the most helpful people, and some of your peers, then if that's you, then we've got
it's going to be perfect.
Well, and wait, hold up. They get to meet all of us.
They get to meet us.
They get to meet us.
They get to meet Rabih, Victoria, and Ryan. Yep. I will also be there. But this dream team right here, you will meet along with the rest of our team. Yeah. That's enough of a reason to come
hang out with us.
Yeah, you guys are doing a live podcast. They could watch you do it.
We are going to do a live podcast at the event, so you can come do live Q&R. You can say whatever you want into the mic.
Yeah,
you can say whatever you want into the mic. We can't. It's live, so
that's going to be fun.
It's going to be really fun.
Did you just learn that you were doing this? Right?
Did you just figure this out?
But I don't care. That's great. Okay. I like that impromptu stuff.
Yeah, that's what we're going to do. We're going to do a live Q&R, literally handing mics to people and saying, here's a question. You can just ask it. Hopefully you keep it PC, but if not, it'll still be fun.
Yeah, an opportunity to be on the show.
How do they register? How do they get now that they're so pumped up?
They're going to be so jacked up. DentistMoneySummit.com. Get all the information. You can also get it off dentistadvisors.com. There's a link there that says Summit, but either way, check it out. If you have any questions for us, let us know. But on the Dentist Money Summit website, you will see all the speakers. We just had a conversation with Perrin Desportes earlier this week. He kind of shared with us what he's going to be talking about. And honestly, I'm not kidding you. It blew me away. It was amazing what he's going to cover with group practices, how to grow your practice, kind of the DSO landscape, how to do it the right way and not like the Heartland way, if that makes sense. So it's going to be fantastic. He's just one of many speakers that are going to be there. So DennisMoneySummit.com. Okay, guys, we're going to end it there. That was our 2 cents. There's only one thing left to do. You know what it is, Ryan. That is go forth and live your rich life. Bye-bye.